my voice. You can see my slides. We should be progressing here. All right, excellent. It's good. It's not that low. All right. I don't want to waste any time today. My name is Shawn Beecher. I'm going to be your host for today's little 20 minutes. Since about 2004. Spent a number of years. Now let me just make sure. Spent a number of years as not only the vice president of Market Traders Institute, but also a number of years as the vice president of one of the largest foreign currency brokerage firms in the entire United States. I am an experienced educator and trader. I have taught all over the United States, internationally as well. Expert Forex analyst, featured all over the place. I don't want to waste a lot of time telling you guys some information with you today. Now, one of the common misconceptions that I end up getting is people ask me, one of the things they say is, Shawn, is the foreign currency market a risky market? Or certain myths that they consistently hear about foreign currency trading. One of the myths is that the Forex market is unpredictable or that it's fixed. People tell me no one makes money as a foreign currency trader. Or if I don't have time to watch the market, I don't know if I can succeed. They also say, you have to have a lot of money to trade foreign currency, or things like there are too many things to consider when you trade foreign currency. I've heard it'll take me too long to learn. I need something I can make money on now. Or this one is the one that I like the best. They say, oh, the Forex market is just way too risky. Now, what I want to do today is I want to kind of destroy some of these myths, but I want to put some focus on three. Number one, the Forex market is unpredictable and fixed. I want to talk about this because this is one that I really, really think deserves being addressed. Also, no one makes money in the foreign currency market. And I love it when people tell me that the foreign currency market is just too risky. Because, ladies and gentlemen, in today's presentation, I'm going to prove to you that that's wrong. Now, the first thing that I want to address with everybody is the concept that the foreign currency market is unpredictable and fixed. A room of hundreds of traders with me right now. But it doesn't matter what your trading level is or what your experience is. Oftentimes, even the easiest to identify charts can be difficult to read until you have a little bit of help. Now, the second I draw these two lines on your chart, I guarantee the vast majority of the room immediately sees the pattern. Now, what I want you to understand is if you look at your date range here, you're looking at 2006 all the way up to yesterday. Now, one of the things that is extremely interesting is if I put these circles up on the chart, I think everybody in the presentation can agree, man, this is pretty straightforward stuff. This is a support and resistance trade. But ladies and gentlemen, it's so much more than that. Because of the way that the currency market trades, the distance between my green line and my red line, you can see it up here in the top left-hand corner. The distance here is roughly 2,456 pips. Now, I don't want to assume that everyone in the presentation knows what a pip is, so let me just explain it to you. Off of a roughly $2,000 investment, you're looking at $24,000 of pure profit in each and every one of these circles. So what that means is when that black line goes from the green line to the black line, you made roughly $23,000. Now, that's another $23,000, another $23,000. The amazing thing about any market, not just currency trading, and again, us as traders, we all have to agree with this, simply put, the way that this market and any market works, when you understand what you're doing, it becomes a lot more obvious. But the second that you don't, obviously it's a challenge. Well, guys, here's another one that I like. Again, kind of on the subject matter of the foreign currency market being unpredictable. Last year, and you can see it August 5th, 2011, last year, the United States got its first ever credit downgrade from Standard & Poor's. Now, credit downgrade means that very simply the US dollar should have been losing value. However, if you take a look at what the market did over the long term, not only did the US dollar gain value, but ironically, the screen that I just showed you previous to this actually supports this information. So anybody that's here that says, this market is just unpredictable, ladies and gentlemen, here's a zoomed out view of it. Now remember, this is the exact same thing we looked at before, where we explained, hey, very simple, it's predictable, and every time it goes from green to red or red to green, it's worth $23,000. There's the first ever credit downgrade, and look at what the market does. Something that's allegedly going to shake the market up doesn't even affect the market. Now, some of you don't remember necessarily that credit downgrade, but one of the things that I think most all of us will absolutely remember, March 11th, 2011, this was the tsunami that hit Japan. Now, this is the worst natural disaster in Japanese recorded history. Each one of these candlesticks on your screen represents 1 day in time. You see for a 2-day period, the market tumbled, but over the course of the next 2 days, it rebounded back, it moved right in the range, and it did exactly what it was supposed to do. This is the beauty of the currency market, is that in my opinion, and you heard this in the beginning, I've been trading in markets for almost 20 years. Truth of the matter is, I've done options, equities, commodities. In my opinion, the currency market is one of the most easy to understand markets out there because the number of variables, in my opinion, are extremely low. Here's another one. Another one that I like is, the currency market is unpredictable and therefore it's fixed. What I want everybody in here to understand is, unlike other markets where you feel like you have to be ahead of the curve, you have to be a super trader in order to be able to make money, some of the old adages that are out there, you have to buy on the rumor and sell on the news, that's not the case in the currency market. This is a $4 trillion market. What you're trying to do is figure out what the other major institutions are going to do, and then based on that, you just want to trade alongside them. What about this one? Foreign currency market is way too risky. Now, I'm going to tell you, any market that you get yourself involved in and you're underprepared, you're bringing with you an immense amount of risk. But the truth of the matter is in every single market that you're going to get yourself involved in, there are specific skills that are necessary for a trader to see success. You got to have vision. You have to have a skill set. You must have discipline. You absolutely have to have courage. And all of my traders in here can absolutely attest to that. But you also have to be unbelievably adaptable. Now, the truth of the matter is, the beauty of this market is, what if you could figure out what the larger institutions in this market are going to do? Again, you don't have to do it first. You just have to figure out what they're going to do and then mimic it. What would that be worth to you? What could that do for you as a trader? Now, let me give you a simple example. And all of this is gone over in a presentation that we actually host this evening at 6 p.m. Central, 7 o'clock Eastern. But let me just give you a quick run through. How many of my traders in here, and I don't have a lot of time, so try to answer as quickly as you can, but how many of my traders in here see the trade on your screen? If you see that trade on your screen, type in the letter Y for yes. Keel, excellent job. Yep, there's John, Jan, Jack, David. Good. For everybody with me in this presentation that sees the trade, for those of you that do not, let me explain to you where these trades lie. Now, first thing I'm going to introduce you to is a trend line. A lot of you are familiar with this. The second I put this up on your screen, who now feels like, hey, Shawn, I absolutely see this trading opportunity right now? Come on, where are my yeses? There you go. Now, all of a sudden, a much larger portion of the room is saying, yes, I see the trading opportunity. But one of the challenges that all traders face is they're always attacked by the yeah, but. Now, the yeah, but is the thing that says, well, that's just a trend line. Who's to say that it doesn't break the trend line and fall all the way back down to the absolute bottom of the chart? Well, as a trader, what you're looking to do is not just identify the trend line, but start using things like correlating values, like Fibonacci. Now, this is something else that MTI teaches you all about. But when you start taking a look at things like the Fibonacci values that are there, you can see that previously at a 382 retracement, the market bounced. Now we're sitting at a 5.0 retracement. The rule says that when it hits this level, it should bounce again. When I take that off of the screen and start taking a look at support and resistance, something many traders are already familiar with, but consistently gets underutilized, all of a sudden we take a look at the obvious resistance level. Market hits the resistance and falls. Obvious resistance level. Market hits the resistance and falls. Now, there's an old adage that says previous levels of resistance become, anybody want to finish that thing? Future levels of support. To make it nice and simple, what was once the ceiling becomes the floor. Once it stopped the market from going any higher, and then it stops the market from going any lower. So what we're anticipating is at this point, once again, the market should bounce. Now, what this is a variety of different correlating values. Oftentimes it's described as confluence. Now, ladies and gentlemen, when I put all of this up on your screen, you're bouncing off of a trend line, you're bouncing off of Fibonacci, you're potentially bouncing off of support. For everybody in here, is this trade now utterly obvious? See, this is the reality of trading with an expert. It gives you the ability to identify what other experts have the ability to see. This is the key. Now, I don't know about you folks, but I've had that feeling of trading in the zone, and unfortunately, I've had that feeling of not trading in the zone. When I say trading in the zone, it's almost like you can do no wrong. Unfortunately, I remember what it was like to not be in the zone as well, where it seems like you can't do anything right. The beauty of the organization that I'm speaking about today is that they help all traders, no matter the skill level, identify the characteristics necessary to trade in the zone. Now, another one that I wanted to spell today, no one makes money trading in the foreign currency market. This could not be any further from the truth. Let me show you what I mean. Now, the information that we're going to talk about today comes courtesy of an organization called Forex Magnets. This is January 2012. This was published. First thing I want you to see is this: 9% of all currency traders succeed. Now, for those of you in here, and I know the vast majority of this room has heard that urban legend that only 5 to 10% of all traders succeed. Ladies and gentlemen, just use some common sense. No one in their right mind has a pain threshold high enough to fail year after year after year after year. The truth of the matter is, and this comes not only as a report from all U.S. brokers, but in addition, this information is backed up by the Bank of International Settlements, the BIS. For everybody here, approximately 39% of all currency traders succeed. Forex traders' profitability actually rose 6.4% in the fourth quarter of 2011. Now, the interesting thing about this statistic is this wasn't an anomaly. This was the second consecutive quarter of increased profitability. For everyone here, the truth of the matter is this: you have all heard stories, and if you haven't heard them, they are absolutely true. They're amazing pieces of information. There are a number of multinational organizations that might have losing years as a company, but still have the ability to make an excellent revenue as a currency trading organization. This is the beauty of the currency market. And in my opinion, this is one of the best kept secrets out there. Here's another one. What about this one? No one makes money trading in the foreign currency market. You know, guys, I think one of the common misconceptions, and this happens in every single market, traders put so much pressure on themselves to attempt to be ahead of the curve, to attempt to be in, exceptional traders, when the truth of the matter is, in the currency market, that's not what you're looking for. As somebody that's been affiliated with a number of different firms, worked and taught institutional level traders how to trade foreign currency, this is the reality of trading, especially if you want to see success long term at any skill level. We've all heard the saying that the lion is the king of the jungle. Even the king of the jungle knows to hunt the easy prey first. What ends up happening for most traders is it takes them years just to identify where the easy trades lie, what the characteristics are of them, and what to look for to identify when those trades are going to take place. This is precisely what Market Traders Institute teaches. Now, for everybody with me in the presentation, another one that I want to get a chance to talk about. So there are a variety of different mediums that Market Traders Institute has set up. One of the ones that everybody always gravitates toward, this is an FX Turbo Trader system. I want to take an opportunity here, and I want to make sure I have a little time left over to make sure and answer any of the questions, because I see some great questions coming through. For everybody here, this is the FX Turbo Trader system. Now, I'm going to show you just some quick snippets of information here. One of the things that we're extremely proud of, this Turbo Trader system has an incredible 360% return on investment. Now, let me just show you kind of the parameters for this. This was traded in only one currency pair. There are 60 different currency pairs to trade. In addition, we were only trading single standard lots. Now, let me quantify that for you. It means we took a roughly $2,000 investment. We took a roughly $2,000 investment in one currency pair, and over the course of 60 days, we walked away with $10,800. Now, the thing that I want you to understand is I don't want you to think that this is a crazy statistic and that maybe all of a sudden in the last week we did well. The truth of the matter here is simple. Each and every person in here, $5,000 of that $10,000 was earned in less than 30 days. For everyone here, because of the way that the currency market trades, Market Traders Institute has set extreme goals for their clients. And the beauty of the way that this works is that, ladies and gentlemen, these goals are being reached. One of the things I want to do is this, and I was thinking about this. I'm saying to myself, what is the absolute best way to help somebody understand the true potential in the currency market? And taking into account the potential for my own bias or the perceived potential for my own bias, I wanted to introduce you to my professional Facebook page. Now, one of the things that we do at Market Traders Institute is we actually get in contact with clients. I am constantly communicating with clients, letting them know what's going on, letting them know what I see. Now, the beauty of this process is that through the course of my conversation with us, hey, this is how the trading is going for me. Now, again, guys, some of this information may not look completely familiar to you, so I'll kind of walk you through it. When Ricardo turns around and says he's up 70 pips and 110 pips, the assumption is that he's taking a $2,000 investment, or roughly $2,000 investment. Now, one of the things I want you to understand is you could trade in larger increments. But assuming that these folks are only taking a $2,000 investment, when Ricardo says I made 70 pips, that's a $700 return on a $2,000 investment. When he says I made 110 more pips trading the pound versus the dollar, that's an additional $1,100. Now, you put these two together, Ricardo is simply telling you I've made $1,800 trading foreign currency. Nice week. Now, for many of you in this presentation, you're thinking, wait a minute, did I hear that correctly? Did he just say $1,800, nice week? That is exactly what I'm pointing out here. And the nice thing about MTI is that we have client after client after client that you have the ability to look at. You have the ability to see. Again, Wes, up 102 pips. That's $1,020. This is a $700 rate of return. This is a $700 rate of return, $750 rate of return. It goes on and on and on. $800 rate of return. Now, take a look at this one. This is Bill. Bill says best week since joining Market Traders Institute. Up 450 pips and rising. Now, at $10 per pip, this is $4,500 in an individual week, and Bill isn't the exception. Take a look, Jay, $6,000 over a week. Rasan, $2,650. The amazing thing about Market Traders Institute is that some of the sayings that you folks have heard, I don't know if anybody here has ever heard that concept of, hey, success is not a fantasy. Success is actually a formula. The beauty of Market Traders Institute is that they share the formula with you as a trader. And through that formula, this is what MTI clients have the ability to experience. You've got anything from, now this is not an average week. I want to be clear with that. But ladies and gentlemen, take a look at this great week closing out with 1,694 on a $10 per pip average. This is $16,940. Now, how many weeks like that a month or a year does it take for you to be thrilled with the idea of getting yourself involved in foreign currency trading? Well, what about this one? And I really enjoy comments like this as well. Richie says, I'm still learning. I lost 363 pips, but I won 745 pips. You look at the net numbers here. That's 383 pips, $3,830. David says, closed out with 200 pips, $2,000. Here's another myth, and I'm just going to throw this one in there. I want you guys to understand, some people think that you must be, a finance major or an economics doctorate. You have to have some sort of a super intelligence in order to trade the currency market. And this is just not the case. Market Traders Institute specializes in takes all walks of life and showing them how to be able to trade currencies. Whether it's somebody like Richie, if I'm not mistaken, Richie is a student. Whether it's somebody like David, and David is somebody I'm very proud of. I've worked very closely with David. David is not a live to work kind of guy. David is a work to live kind of guy. I think it's pretty clear here. David is not a floor trader. David is a bass fisherman. Ladies and gentlemen, it does not matter who you are. If you want to give yourself an opportunity to succeed, that's the beauty of what Market Traders Institute does as an organization. They give you that opportunity. Now, again, one of the other things I want to get a chance to talk about here just simply, for all of you with me in this presentation, if you're saying to yourself, okay, this is something that I'm genuinely interested in getting more information about, this is how you have the ability to do it. At 7 p.m. Eastern Time, now that's 6 o'clock Central, I'm going to be hosting tonight's presentation. Now, I love getting an opportunity to communicate with you. A lot of the stuff that I kind of brushed over in this presentation, an in-depth understanding of it. It is completely live. It is fully interactive. You ask questions. I answer them real time. For everybody in this presentation that is genuinely interested, and I'm going to go ahead and I'm going to post the link in the chat section here. if you are genuinely interested in trying to find out if you're maximizing your investing dollar, I challenge you. Attend this presentation. Give Market Traders Institute an opportunity to communicate with you, and most importantly, accept proof. Give them the ability to prove to you the foreign currency market is the market that you've been looking for, but many of you either did not know about or have been misled about. For everyone in here, I want to take an opportunity, and I hope I'm not breaking any rules here, but I saw a number of questions come through. I want to answer any questions that you might have. It looks like I've got 4 minutes left. I'm going to turn it over to you folks in the room, because the most important thing in any presentation that I try to do is I try to make sure that all of you understand you're the focus. You're absolutely the focus. I'm going to tell you some Alex types in here. It says some brokers offer you 500 to 1 leverage. So you can start with about $300 and make $1,000 a week. You know, I always look at it from the perspective here in the United States. Here in the United States, they're trading on 50 to 1 leverage. That's the reason that it takes roughly about $2,000 to get into a $100,000 position. The nice thing about trading in the currency market in general, who here in this presentation is a little bit afraid of leverage? Who here says, oh, I've heard bad things about that leverage. That leverage can be a very scary thing. Who here is just naturally apprehensive when you hear about leverage? Yeah. For all of you with me that are saying your yeses or your me's, there's a very good reason for you to conventionally be apprehensive about leverage. It's 2 words. Starts with margin and it ends with call. I don't blame you for being apprehensive about leverage in other markets. Because the truth of the matter is, in other markets, you can get yourself into quite a bit of trouble. In other markets, a $2,000 investment could cost you tens of thousands of dollars, even though you only invest $2,000. But truth of the matter is in the foreign currency market, if you take an extremely highly leveraged position, the worst, and let's talk about worst case scenario here. Absolute worst case scenario, extent of your account. That's assuming you're not trading with a stop loss, which obviously is a bad idea. That's assuming that you're not monitoring it and you're just letting that market run as far against you as possible. At no point in time, at least here in the U.S., can you ever go negative in that account. Now, simply put, if I said you could take a $2,000 investment, have control of $100,000 worth of a currency, and most importantly, get paid like you invested $100,000, and best part, at no point in time can you ever lose more than the extent of your account. Who do I have in this presentation right now that says, Shawn, I love the idea of stretching my $2,000 investment to $100,000 and not having to worry about losing $100,000? If that's you, type a yes into the question section right now. And Keel says yes. Wayne says, sounds very much worth looking into. And ladies and gentlemen, I'm not trying to convince you to quit your job and do this. What I am trying to do is convince you to come, join us this evening, give us an opportunity to show it to you. And for Jay types in, sounds too good to be true. I want you guys to understand something. The foreign currency market is hands down the largest market in the world, period. Equity market does roughly $100 billion a day in volume. The foreign currency market, listen to this, does $4 trillion a day in volume. Keep that in mind when you say, oh, that sounds too good to be true, because truth of the matter is this is hands down the largest market in the world. Another great question here. Alex says, Shawn, how many years have you been trading in the Forex market? Now, Alex, this is a great question. Oftentimes you'll ask somebody this question. What they'll do is they'll tell you how many years they've been trading. I want you all to know I have been trading specifically in the foreign currency market for working on 9 years. Now, I don't have a very high threshold for pain. If I'm doing poorly, I'm looking for greener pastures. Ladies and gentlemen, I'm telling you, the reason that I've been able to decipher this market is purely because of my association with Market Traders Institute. Yeah, here's another one. Joshua says, is it hard to close out of a position? I have a hard time closing out of some of my positions in the stock market. Joshua, I remember those days. Ladies and gentlemen, remember, with a $4 trillion a day market, I am in the second I push the button. I am out the second I push the button. Now, I'm a little bit of a literalist. So when I say the second I push the button, maybe it takes a second, literally 1 second. Oh, and how about this? How about the fact that in addition, you can trade 24 hours a day, 5 days a week. You can short in this market without having a huge account. And how about this one? And this is another one that I'm a big fan of. In this market, you also get the ability to day trade at your convenience. You can be in and out, in and out, in and out whenever you want. All of this is the benefit of currency trading. And for everybody in here, I'm going to post this one more time. I encourage you, give yourself an opportunity to join us. I want to say thank you to each and every one of you. I hope to see you this evening at tonight's presentation. I hope I've given you some information that you genuinely have the ability to use. From all of us to all of you, happy trading.
Great. Thank you, Shawn. We really appreciate you taking the time to be with us today, and we will definitely get a copy of that recording up and posted for all of you. So again, be sure to join them at markettraders.com/register for that special presentation tonight. All right, at this time, I'm going to turn things over to our third and final speaker of the day, Ryan Dietrich of Schaefer's Investment Research. Ryan, everybody should see his slides, and Ryan, you can take it away the next 25 minutes. The room